One thing that can help you the most in your trading is properly analyzing volume. What I'm gonna do in this video is show you precisely what I looked at in a real trade using volume and how that became most of my analysis. One of the most popular videos I've ever made actually involves my interpretation, thoughts, and opinions on how we use and interpret volume in our trading. The reason that this video was popular, in my opinion, is because it actually went into the why behind a trade rather than just showing off and like, oh, look how much money I made trading, which is always cool. We know that we want to make money trading, but in essence, our objective is to understand the why. This short video will help you with that. So anyway, here's the computer. Let's dive in and make it happen. You guys rock. What do I do when I'm day trading volume? Let's go check it out. Here is the trading question. This is Leslie's. And this was the only official day trade that I was able to place today, although I did take some other trades. Looking at it right here, I want to kind of explain why I took it in a little bit of a slowed down version. And then I'll go into the actual trade setup so you can see me do it there as well. First and foremost, overall market, relatively bullish today. Nothing too crazy, but just some decent amount of bullishness out there. So that was interesting. But Leslie's has been in a nice bullish trend. This is one we've been interested in swing trading since back over here when it pulled back into the 100 simple moving average, aka the blue line. Had this little double bottom. And anyway, I've been tracking this one for 2 or 3 weeks. So I generally had a bullish perspective on it anyway. It was a swing trade that we were planning on, right, getting in right there. One of my coaching students, Chris West, took this trade for a nice little profit. And yeah, so you had a nice little bullish candle and then a gap down today. Generally, a bearish gap and go. 100% agree. Normally, you could be looking at trading this bearish. So why did I go long? Here's the 5-minute chart. And on the 5-minute chart, the very first thing that was intriguing to me was this candle right here. Huge bear candle, massive bear volume. Second candle, huge bear volume, again made a lower low. Then with absolutely no volume at all, we closed above all of that bear volume. So those traders have to be upset. And in fact, I'm sure some traders actually went long right here with a stop loss down there. The only reason I didn't do that trade is mostly because the risk reward wasn't that great. You know, if you had entered with a bullish entry above these bear candles and above the bear hammer, then most likely you could have expected best case scenario a gap fill, which would have only been like a 1.2 risk reward ratio. So again, with all of this bear volume here, you have to be considering the short traders. There are people who are shorting. It was a bearish gap and go. A lot of people are expecting the bottom to fall out on this company, so they get in short. Well, again, how do traders exit short positions if they're in bearish? Well, they have to buy to cover. So this buying kind of came in, then we dropped a little bit lower. This was the spot that got interesting. When I was doing my just random scans, I noticed another huge volume spike. Again, without really having much more information other than look at the lows. Check out, keep a very close eye on this number. The low of this candle, 29. Low of this candle, 29. Low of this candle, 29. It's a brick wall. Brick wall. And for 35 minutes into market open to have this much bearish volume and to not make a new low says to me, okay, if it does create a trap, then there's a lot of people that want this to happen. There's a lot of people that are expecting that to happen. So here's the next candle that came in. Boom, held at 29 again. 4 candles in a row. So number one, you're recognizing the low is in and being held. Number two, you're recognizing the candlestick pattern. Number three, you're recognizing the support. And what's more important, realistically, is this candle closed above that volume. That is huge. That volume got taken out with a close, meaning it held all of the seller's attempts to push it down with a close. So all I did was set up the entry to buy a pullback at the high of that candle. The high was 29.12, and the low I put below the low of the day, which was also below pre-market low. Now, could I have gone a little bit more aggressive and maybe put a stop below this candle and had a stop loss at 28.78, or been an absolute hero and did a stop here at 28.98? The answer is obviously yes, I could have. I didn't. because apparently I'm a turd. So anyway, when this candle triggered, this is what it looks like. Obviously, I never, ever get the exact low, but in this situation I did. Here's a screenshot of my order fill. I got over 2,500 shares on this one, and it filled exactly at 29.12, the exact low, which never happens. It's so rare for that to occur. But anyway, really good fill at 29.12. That was the price that I wanted. And this was one where when you get this volume squeeze or this volume pinch, you do expect the trade to work relatively quickly. So this was way too quick. I was extremely ecstatic about this trade, but this actually skipped over my target and filled me at 29.85 for my limit sell. So this is a great, gorgeous setup on Leslie's. It did happen very quickly, but it was entirely based on volume. Although this Leslie's trade might be it. All right, so let's do it. LESL 29.12 by 28.66. New official day trade. LESL. Trying to buy it above all that bear volume on a retest. Stop below pre-market low. Pretty far below pre-market low, realistically. And not even a full dollar. $28.66. Okay, order is open. Brody says, what made you go bullish when it's a bearish gap? The bullish trend on the daily chart, number one. So trend is still bullish. Number two, came down to the 20 and bounced. So same thing it's been doing over here. Number three, it's bounced at this price before. Few minutes ago. Number four, it's taken out this bear volume, so the bears could be trapped. Number five, risk reward to the high of the day with this setup is more than a 1-to-1. That's it. Got 5 things that work. Yeah, man. And stop is below the pre-market low. So it's a fade for sure. It's an aggressive fade. I'm more or less playing that one off of volume. Okay, so today is the 8th. LESL 29.12 by 28.66. Fade. And haven't gotten filled on it yet. Now, that volume trade can work on any time frame in any market on any stock. It just takes practice to know when a great time is to play the opposite direction. For example, Micron just kind of kept going lower all day. There was never really anything for Micron to bounce off of. There was no moving average, right? If we go to the daily chart, the reason I did not fade this one up is because I couldn't find a moving average to really play off of. Remember, Leslie's, I was playing this off of a bullish trend, right? The 20 EMA on the daily chart was already acting as a support. You were above all moving averages on the weekly and on the monthly. And obviously you had bounced off of the daily 100. So the overall trend was already established and it was bouncing off of something. That's normally what I look for when I'm trying to fade something. Over here on Micron, this was one that a lot of traders were trying to get me to fade today in the day trading room, but I wasn't fading it because notice daily moving averages were below all of them. Weekly moving averages were below the 10 and the 20, and then the 50 is super far away. Monthly, well, the 10 EMA is all the way down here at 75. And long term, we're below the 100. So there was really nothing for this thing to bounce off of. Leah was shorting this one back over here like 81, which is perfect. But you'll notice that there was really never any super strong volume component. In fact, when this candle comes in right here, you'll notice a decent bullish volume. It did not close above the high, right? No close was made above that bear candle, and this is probably arguably the biggest, baddest bear candle in the sequence. We didn't close above there. This is the next biggest bad bear candle right there. We didn't close above that volume. In fact, it hit a brick wall. So this next candle that comes in, inside candle. Again, upper shadow, inside candle, doesn't close above anything. The bears aren't trapped. Boom, there's your short right there. So you're either shorting there or you're shorting on a pullback to the low of this candle, which was 80.90. So you would be filled on that entry there for your short, and your stop loss would be above this volume. So this is again on a daily chart. Now let's go look at it on a swing trade level. This was one of my more profitable trades realistically, was the trade desk. And this was a very recent trade that I got in based on this close right here, and I got in on the pullback of that. So you'll notice bear gap and go right here, this particular gap. But again, let's just look at the volume. Huge bear volume. This is a daily chart. Massive bear candle, boom. Closed above all of that volume. So what are the bears doing? They're freaking out. They're buying to cover. They're scared, they're worried, they're panicking, they're upset, all the things. So with a close above this particular candle, my assumption, my trade now is, well, buy a pullback. Also, if you're a wave count fan, this could be a very small 1, 2, 3, 4, 5 wave structure is a possibility. And this particular candle also happens to be a new white soldier. So is this one back on May 24th. And here's your exponential moving averages. What's also cool about this one is that you start to blend multiple analyses together. You'll notice that you closed above the 20, you're above the 10, and we have room to go into the 50. So my setup and trade on this one was, again, quite simple. Buy the pullback into the big bear volume. Blink. There it is, filled 567. Great trade. Had to wait for a few days for it to really get rocking and rolling, and there it is. What was the target? The 50 EMA. Bangville. What a great trade. Again, even with just 100 shares, from 568 into 625, that's a beautiful win. Gorgeous move on the trade desk. Sexy, simple, all based on volume. Anyway, I hope this video was helpful. If you have any questions, please email me, Jerremy@reallifetrading.com. I'm always happy to help. Make sure you come over to our website, Real Life Trading Dadcam. And when you get there, there's so much free resources here. Go to the beginner trading, intermediate trading, and advanced trading and get all the education that you want for free. If you do want to pay for some premium courses, obviously every company in the world has premium courses. Ours just happen to be better than theirs. We have an algo trading. We have Increase Your Net Worth in 2 hours, which is all about hammers and swing trading, day trading, weekly options, back trading marathon, so much good information. And if you have more than $200,000, it is worth your time and money to be a part of Hedging with Options. Phenomenal program, one of the best I've ever created. You will absolutely love it. Anyway, that was it for me. Thanks so much for watching, and you rock.